power plants in many parts of the world.
Well, in addition to a strong demand for the physical metal, another market that has really expanded is, let's call it the paper market for silver, because trading volumes on a lot of the exchanges, especially the CME Group, has expanded tremendously. Let's talk about the paper market versus, let's say, the physical market.
Yeah, it's funny because some people will say, well, first off, yeah, the paper market is just enormous for both gold and silver. And the COMEX silver futures and options contracts are probably the premier, they are the premier place where these assets are traded, far in excess of other exchanges. I have to be careful because we work with a lot of the exchanges, including Nice Life and MCX in India, and these guys do trade silver, and they have viable contracts, but the bulk of the trading still goes through the COMEX. And it's very important. You have billions of ounces of silver that trade on the COMEX and in the over-the-counter forward market on an annual basis. People say, well, if those paper contracts didn't exist, the price of silver would be far higher because people who want to buy silver exposure would have to go into the physical market instead of the futures market. It's probably true to some extent, but, the futures markets facilitate a lot of things in the physical markets, which help support the growth in physical silver supplies. And also what you'd probably find is the silver price would be more volatile. It would spike higher, and then it would come down with busts if you didn't have this ability to offset some of that demand through the paper markets.
I want to come back and end on what I think has become the gorilla in the room when it comes to silver, and that's the silver ETFs. I noticed that, for example, last year, 4 new physically backed silver ETFs were introduced in 2010, which collectively added another 34.3 million ounces, or an increase of 28% of net additions made in 2010. Of course, the largest of these 4 was the Sprott Physical Silver Trust. This fund basically accumulated 22.3 million ounces, and 3 of these 4 funds were introduced in the last quarter of 2010. What role did the introduction of those, let's say, 3 of those funds play in terms of the rise of silver in the last part of the year?
Well, as you said, first off, it's kind of hard to say with great accuracy because there were other things happening. We were discussing earlier the Ben Bernanke speech in August, and to some extent these guys were very fortuitous in that they jumped through the regulatory hurdles and rolled out their products just as investors were saying, I've got to get some silver. But the marketing and the availability of those products clearly helped bring new investors and new demand and additional demand into the market. It's hard to say how much of that demand, was they were at the right place at the right time versus their presence and their marketing programs for that. But it was definitely a major factor there.
Yeah, because I'm looking in your silver book, you've got the listings as of December 31st, where I think there's like 10 of these ETFs, and collectively there are 592 million ounces of silver. So if you really want to find out what's going on in the silver market, I would suspect, Jeff, studying these ETFs, the premiums or discounts to the spot price of silver, obviously when you have a hoard that large, it has become so much more important to the bullion market than, let's say, what's going on with the COMEX warehouse.
It's been true always in silver and in gold that you have this very fat tail, which is the investor holdings and investor stocks and investor demand and the paper trading, that is much larger than the physical supply from mine production and scrap and demand by jewelers and electronics companies and other industrial users. So you've always had to watch this very fat tail that could really wag the dog back and forth. One of the things that's happened with the rise of the ETFs is that a bigger portion of that investor market is now transparent. You get the data. We get the data on a daily basis as to the changes in the different ETFs. Not all of them publish it on a daily basis, but some of them publish it on a weekly basis. But we collect that data as it comes out, and we scrutinize it very carefully because, yes, it is a very good indicator of a large portion of silver investors' perceptions and expectations of prices.
Going forward, would you expect the same softness in silver that you expect in the gold market, let's say during the summer months, and then strong demand coming into the end of the year? That would be my first question. And a second question, Jeff, as I take a look at the price of silver today, and let's say the average guy is going out buying, coins, let's say, it is much easier to buy a silver eagle when silver's at $35 when you compare that to the spot price of gold, which is $15.20. You add the government markup and the dealer markup. I mean, you're talking about close to $1,600 an ounce. There's not too many people that have $1,600 an ounce to go out and buy coins. So would you expect the demand by investors to continue to be strong in the silver market versus the gold market?
Yeah, we think the silver market's probably going to continue to outpace the gold market in the next couple of years. You know, if you look at our long-term price expectation for silver and gold, we have gold starting to outpace silver again after 2013, 2014. But for the next year or two, we think that the silver market's probably going to continue to outpace gold. And part of that's going to be the continued strong level of investor demand. Clearly, the per unit price has a lot to do with it because silver is more affordable at this point. And it's also easier to, if you bought an ounce of gold for $1,600 and the price rises, you have to sell the whole thing. If you buy 30 ounces of gold or whatever the number is, or 40 ounces of gold for $1,600 and the price rises, you can sell 10, take some of your profit out, and still have 75% of your silver position left. So it's a more flexible investment as well as a more affordable investment. I think that those factors are going to keep it there. You were asking about the prices. We think that the price of silver will go through a soft period in July and August. And you've got to remember, and anybody who had forgotten was reminded in early May, the silver market is an incredibly volatile market in terms of its price. The price of silver is probably 50% more volatile than the price of gold. And so I wouldn't be surprised to see the price of silver ramp down sharply at some point during July and August. We've been telling people that $28 or even $26 is possible on a spike down. We don't think it'll stay there at all because there's so many people who would take that opportunity to buy silver. But I do think that the silver market will see that weakness, and then it will be recovering by the end of the year.
All right. So, Jeff, just as we spoke regarding your gold book, you expect softness during the summer, which could afford investors some buying opportunity with a strong run as we get closer to the end of the year for both gold and silver. Would that be correct?
You know, as you said, the price of silver rose 77%, I think, in the last 4 months of the year. The average price of silver probably rose on the order of 38% last year. And this year, we wouldn't be surprised to see the price of silver on an annual average basis maybe 52, 53% higher than it was last year. So we still think it's got a lot of oomph in it.
All right. Well, listen, Jeff, I want to thank you for joining us on the program. If our listeners would like to find out more about the CPM Silver Yearbook 2011, why don't you give out your website as we close, if you would?
Our website is www.cpmgroup.com. People can read about our books. They can order our books electronically on our website, and they can also download free things in a free library, including various articles about silver and gold and past presentations that we've made on these metals.
All right. Well, must reading if you are in the bullion markets. If you want to really understand the drivers, the fundamentals behind the precious metals. Once again, cpmgroup.com. If you want to get information on the Gold Yearbook 2011 and the Silver Yearbook 2011, we've been talking with Jeff Christian. He's the founder and director of CPM Group. Jeff, thanks for joining us on the program.
Always a pleasure.
The Financial Sense News Hour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the News Hour each involve their own unique risk factors, which are not discussed on the show. Responses to listener inquiries are based on the personal opinions of James Poplava and do not take into account listeners' suitability, objectives, or risk tolerance. Financial Sense NewsHour and its parent company shall not be liable for any financial losses that result from investing in any companies profiled on or advertising with Financial Sense, or arising out of the use of any material on the NewsHour. Be advised that you invest at your own risk.